in the financial crisis here in the United States, in the banking crisis. Now, you wouldn't know it by looking at the stock market, right? I mean, yeah, the Dow was down a couple hundred points today, maybe 250, but Nvidia made a new high, right? So, hey, everything is great. And the tech stocks, the Nasdaq was down a little bit today, but not as much as the broader market because people are still piling into these stocks as if everything was great. But everything isn't even close to being great. And I think what's going to happen as we see the weakness in the economy and at the same time an uptick in inflation, which is very close around the corner, looking at various prices, you can see that curve is bending up as the economy is headed down. That is going to put enormous pressure on the deficits of the United States and more downward pressure on the dollar. The dollar to me is still looking very weak. It's not rallying on all this talk of, tight money and an aggressive Fed. The dollar is not getting a boost. But all this stuff, I think, is going to be a perfect storm to really blow up that fiscal time bomb that is so apparent. And when you look at what just happened with the deficit and the suspension of the debt ceiling, the creditors are figuring this out. The de-dollarization is not just about the sanctions to their homes. So, instead of, let's say, going to a supermarket and buying groceries, the groceries are just delivered to everybody's house. I know that because groceries are constantly delivered to my house. When I grew up, that didn't happen. My mother needed groceries. She went to the grocery store and bought them. Now, my wife just orders them on Amazon and they show up from Whole Foods. We don't go anywhere, right? So there's a much bigger transportation cost involved in sending all this stuff out the way it is. Yeah, I mean, we're not driving to the store, so that cuts down that. But for the stores, having to pack everything up, ship it out, I mean, and all the extra packaging, it seems like it's a lot more work. And of course, a lot of the stuff that is shipped, on Amazon, just individual things that you used to buy in bulk. I mean, we get packages that come and there's just one item in there. I mean, sometimes there's more cardboard than there is product because stuff, sometimes you order it one at a time and they'll ship it out. Whereas if you used to go to the store, you would go and you'd buy all the items on one trip. You wouldn't just order them individually. You didn't go to the store just to get one thing. You kind of waited until you had a lot of things. But, you got Amazon Prime, everything is free. You can just order batteries, just a set of them, and they'll ship it out to you all by itself. So it's a tremendous cost involved in distributing all this stuff, which is, weighing heavily on the GDP. But this is just an example of what we're getting, because 20%, I mean, that is more than double the official inflation rate in the United States. And I would think that these increasing transportation costs are more reflective of what was actually happening to prices, because just about everything we buy has to be shipped. And, a 20% increase in those costs, doesn't really jive with the low number, not low, but much lower number, 8%, whatever, that we were getting from the government. That 20% is much closer. And that's a real cost, right? That's not a makeup cost where the government just, manufactures it through a rigged CPI. That's an actual cost that they weren't able to lie about. Anyway, though, getting back to the markets, because I mentioned that the tech stocks were, relatively strong today. Well, they hammered the gold mining stocks. A lot of times when stocks go down, people say, hey, I never talk about them when they go down. I like to talk about them more when they go down because it's a better buying opportunity when they go down. But they hammered the gold stocks today about 4% or so. Gold was down about 15 to 20 bucks, somewhere in there. I'm looking at it right now, 9:20 in the evening, East Coast time. Gold's about $1,937 an ounce. One of the catalysts for this morning's sell-off, although gold was already down and then it just went down more. I think were the data that came out at 8:30 a.m.